Let's just talk about the market reaction first of all. We did see some optimism initially on the WHO decision, perhaps because investors saw it as serious efforts to contain the virus. It's quickly faded. What's the market telling us?
Well, the market's waiting. The market's waiting to see how the spread of the virus progresses and whether or not the spread becomes more ferocious or not, really. From a macroeconomic perspective, I think for the time being, other than the links between financial markets and the economies in the western part of the world, the main focus should really be on China.
Yes.
The narrative for China, when you break it down via various different layers, whether it's the global trade situation, whether it's the financial system in China, the debt level in China, and the situation in Hong Kong, and now, of course, this latest situation with the Wuhan virus, the picture doesn't look particularly rosy for China.
Yeah.
And I think why this is important if you're an investor is because prior to this, I think generally there was a view that on a medium-term basis, foreign, private, and official investors needed to up their share of exposure in China.
Yeah.
And I think that's open to question now.
So, Stephen, with China, of course, we've got the PMI data as well. The non-manufacturing PMI increased, but of course that number doesn't really capture what's happened since with the coronavirus. More and more people coming out with calls that we're going to see more stimulus, both from the PBOC and the government. How do you trade the Yuan in the environment that we get more stimulus, if that's what you expect?
If we get more stimulus and it looks like the virus isn't getting particularly worse and the intensity of the spread isn't picking up tremendously, I think PBOC would be happy for dollar RMB to basically trade in a 685, 695 or 7 give or take range. I don't think it's also, given this new downside risk to the economy, I don't think it's also immune, or I should say probably adverse to dollar RMB trading above 7, but it's always going to happen in an orderly fashion. China, it manages its currency, and so it will move it around in an orderly fashion. If things get too out of control, it will take steps on the capital account to restrain outbound flow.
Orderly versus disorderly, if you look at volatility since the outbreak of coronavirus, we've seen it spike in equities, particularly the VIX and treasuries, but FX volatility globally has remained relatively subdued. Why has the FX market not moved as much as other asset classes?
What, in general?
Since coronavirus.
Since coronavirus.
Like the yen, for example, this week hasn't been that strongly bid.
For the same reason that it hasn't moved very much in terms of overall vol during the trade war. It's because FX is sort of a sideshow.
Sure.
And the ramifications for all of these changes in the global economy are big medium-term issues, and it's not something the FX has a clear picture on so far.